for the third and last day of the Green Swan conference. So this morning, we are lucky enough to be with an impressive lineup of speakers to discuss some very concrete proposals as far as policies are concerned. The question that we are going to address this morning is about the policies which are currently considered by central banks, regulators, and supervisors, and also the challenges they face to address climate change. So what we will try to do consistently with the logic and the dynamic of this conference is to think in terms of solutions, concrete proposals. And to do so, we have, of course, as usual, some very, as usual, this 2 or 3 days of conference, some great panelists. They're all well known, so I'm not going to spend too much time detailing their CVs, but let me start briefly by saying that we're going to have this morning with us Mr. Pablo Hernández de Cos, who is, among other things, governor of the Banque, Central Bank of Spain, Banco de España, and he holds also a number of other very interesting positions for us this morning. In particular, is chair of the Basel Committee on banking supervision. So he will probably give us some thoughts using his two hats. We also have with us Mr. Thomas Jordan, who is chairman of the governing board of the Swiss National Bank. Mr. Jordan also holds a number of other interesting international positions. In particular, is chair of the FSB Standing Committee on Budget and Resources, and is also Swiss representative of the IMF, among other international missions. So again, it's interesting to have this international perspective discussed with us this morning. We also have the pleasure to have Sabine Mauderer, who is also very well known to the green finance community. Sabine is member of the board of the Bundesbank, and she's also famous for being the chair of the workstream 3 of the NGFS, which is about scaling up green finance, and Sabine will probably give us some perspective from the NGFS view as well. And we also have with us Mrs. Simone Robbers, a governor, or couldn't join us this evening, so we're very happy to have you this morning, Simone. Simone is assistant governor at the Reserve Bank of New Zealand, and among other things, she is in charge of coordinating the climate strategy of the Reserve Bank of New Zealand. So it's completely topical for us this morning. I would like to start with a first round of questions to all of you for around 5 minutes each. And I would have to start with you, Pablo, if I may, and ask you a question. I remember a few years ago when we started to discuss whether there would be something for central banks to do in terms of climate. Well, it was not that obvious. And a lot of people were saying it's not within our mandate. So could you tell us how you see, with your perspective, the way we should frame the question to make it acceptable and make sure that it's part of a consensus within the supervisory and central banks community?
Thank you very much, Morgan, for the question, and of course, thank you to the organizers, to the BIS, the Banque de France, the IMF, and the NGFS for the invitation to take part in this panel. As you perfectly know, with both hats, in both my capacity as governor of the Bank of Spain, meaning also member of the governing council of the ECB, but also as chair of the Basel Committee, the topic of climate-related financial risk is one of the top priorities over the coming years. And I think the right way to frame the issue is to base any action on our mandate, which in the end should lead to be very, very proactive. And I will try to justify this idea. Let's start, for example, with the Basel Committee. As the primary global standard setter for banks, our mandate, it very well, is to strengthen the regulation, the supervision, the practices of banks worldwide with the purpose, and this is the key, of enhancing financial stability. So if you take this mandate and you combine it with the fact that, as has been discussed in various sessions during this conference, climate change poses a risk to financial sector, whether they are physical or transition risk, that can be significant in magnitude and that can also have an impact on financial stability at the global level, then I guess that one should conclude immediately that there is a need for supervisors, for regulators, and of course also for the Basel Committee to act. And this act should basically mean that we need to guarantee that individual banks and the banking system as a whole are adequately prepared to identify, to measure, and also to mitigate climate-related financial risk. And this is exactly the approach that we are taking at the Basel Committee level. So you can put it in a different way. Our work should be motivated by protecting banks to climate change, but not by changing the climate itself, where of course other measures, other policy measures are needed, but that are outside the scope of supervisors and regulators. And at the same time, we will know that achieving our goal will in turn contribute towards meeting these objectives related to climate change. And I think the mechanism is well known. As banks, if we are able, that banks manage adequately, mitigate and disclose climate-related financial risk as part of the day-to-day business operations, we should expect a natural evolution in the composition of the balance sheets that in the end will also reflect our path towards a low-carbon world. And the idea is, of course, that they will translate into a change in relative prices of financial instruments that in turn will help to internalize those consequences originating from both transition and physical risk. There is also a second point that I wanted to emphasize here is, well, we have to recognize from the very beginning that, well, there are several crucial limitations in our current capacity to measure this risk, and this is derived from many factors. We don't have sufficient deep harmonized databases. We lack as well sufficient historical depth. We don't have previous experience of structural changes of this magnitude. So in this regard, I think that national and international regulatory and supervisory authorities have also a role to play, a responsibility in filling in these gaps, in collecting more granular data, and also in put all our research capabilities to better quantify the climate change consequences of risk to financial stability and the effect of potential mitigation measures. Let me also add, from the more purely monetary policy perspective, another element to the discussion. Here again, I think the right thing to frame the issue is to base our actions on our mandate. And for example, in the case of the Eurosystem, our mandate is price stability objective. And here I think that in our pursuit of price stability, we cannot ignore the transition and physical risks that I've mentioned before, insofar as they affect the macroeconomy, the transmission of our monetary policies or inflation outlook. Then such risks are bound to affect the conduct of monetary policy, and we know that this can be in a very direct way, because for sure policies aimed at promoting the transition towards a carbon neutral economy are likely to affect inflation and the volatility of inflation. They can also, even in a more indirect way, for example, remedial actions needed to tackle climate change could affect our ability to achieve price stability by impacting on the so-called natural interest rate. So clearly, we have also to take all these factors into account when defining our monetary policy. And here again, as in the case of banking and regulatory banking supervision, I think the first thing that we need to do is to provide more analysis to address the implications of climate risk on the economy on our monetary policy. So, in other words, we have to step up our efforts to develop the tools and the models needed for such an analysis. And finally, one final element that I think is important also from the perspective of monetary policy, Morgan, is of course that we know that climate change will affect the risk of the assets held on our balance sheets. And here we know that monetary policy implementation exposes us to such risk directly through holding of assets and indirectly through collateral pledged by counterparties. And in this regard, I'm very much related, by the way, to my previous comments on the implications of climate for the financial sector. Central banks we have also to step up our efforts to incorporate climate change into our risk management models and frameworks. That would be my first answer to your question. Thank you.
Thank you, Pablo. That's very clear. So central banks need to rely on their mandate. But the problem is sometimes they don't necessarily have the same mandate, and they're not necessarily allowed to do the same things. And this may be a challenge, and this is a challenge you are facing in particular within the NGFS. So Maybe Sabine, Mauderer, if you would like to give us some clue on how the workstream 3 of the NGFS has managed this diversity of mandate.
Yeah, actually, thank you, Morgan. Maybe I just would like to underline what Pablo just said. I think, of course, we have to stay within our mandate, and our mandate is preserving price stability and financial stability. Right? I come back to what we do and tackle this issue with the different mandates. But I think what is very important, what we have to really underline is that already by fulfilling our core mandates, price stability and financial stability, we are contributing already to fight climate change. And Pablo, you especially mentioned our analytical capacities. I think this is really our core, expertise. And not only that we use it for our monetary policy development, but also, what we are doing at the NGFS, for example, and also at Bundesbank is developing different scenarios and calculating over the next years, what kind of impact do especially political decisions or missing political decisions have. And I think in doing so, we support the government in telling them, okay, listen, if you do not act, this probably will have this economic outcome. If you do act too little, too late, this will be the result. With all the uncertainties, we of course have to reflect, right? And also to show up, if you act within, the given time and the urgency, then we might have the chance for an orderly transition. And that's, I think, what we can really raise with our analytical capacity. So I think this is really important to understand, and this is part of our mandate already, right? Well, Margot, your question is how we're going to deal with all those different mandates. Well, clear, there are a variety of mandates globally. And what we did at the NGFS is that we first of all, did surveys among 107 central banks globally, asked them, okay, how does your mandate look like and how much, can you, does climate change play a role? And what we did is that we just, set up a toolkit reflecting all of the different mandates. And by doing so, we allowing central banks to look at this toolkit and look, okay, what, according to my mandate, would fit the most. And maybe one example, we do have also targeted lending as one of our 9 measures to set up. And here, that it is different whether you are in a developing countries where you do have no promotional lending banks, or whether you are, for example, in Germany where you have like a KfW, or on the European level, the European Investment Bank that does already promotional lending. So this is, I would say, for Europe, I do see, here the promotional lending banks, but, we see that in Bangladesh, we see that on the Fiji Islands and in other jurisdictions, they do targeted lending, green targeted lending. And for them, that might fit, right? Because of their mandate and their, current situation. And what we also did is, there's no secret, most of the weeks we spent on this report on 9 different measures, how to reflect climate change on the center, on our balance sheets, is to, to find a way where everybody can live with. And so what we actually do is we don't tell anyone how he has to do it. It's just something we offer. And at the same time, I think what we decided is now we go deep. We dig deeper with everyone to make it more precise. And maybe a last word, what we do now is focusing, especially in the workstream I'm responsible for is disclosure. Right, disclosure of central banks' balance sheets. So we would like to set up a guidance by the end of this year for central banks. How, can we disclose our carbon footprint of our balance sheets? And we also would like to focus, to reflect market transparency in general. And as Pablo said, the crucial thing is that is to allowing the transformation is data, market transparency. And so it's, I think, up to the government, first of all, to, set up a decent disclosure regime that allows us to get all those data. But once we do have this data, and for example, now we in the Euro system do a external data procurement, just to increase the quantitative and qualitative approach towards data. And so I think, once again, to my initial statement, I think these data are the basis for our work. And I think our core competency is the analytical capacities, be it for our own responsibilities, monetary policy and financial stabilities, or be it to raise awareness for the governments that it is time to act now.
Thank you, Sabine. Sabine and Pablo, you alluded to the fact that central banks couldn't do everything. Yeah? They were not the only game in town, I would like to say. They were here to support governments. And so the question is, there is clearly a need for coordination, domestically and internationally. And I would like to ask you, Mr. Jordan, if you would like to take this question and see how you see coordinating actions domestically, internationally, and also please free also to bounce back on the remarks made by Pablo and Sabine. Mr. Jordan, we can't hear you. You seem to be muted.
Yeah.
Excellent. Better.
Well, thank you, Morten, and thank you for inviting me to this important panel. Well, we fully agree that climate change is a very serious global challenge, and it calls for convincing and effective action, as you said, both at domestic and international level. Now, at the domestic level, and we heard that before, the work of central banks is certainly important. However, and we should not forget that the primary actors actually here are governments and parliaments. Only they are elected representatives. Only governments and parliaments have the full democratic legitimacy to act. And they also have the most effective tools, especially a carbon tax. We heard that many times before, but this is probably the most effective instrument. Now, given their role, governments should provide a clear, but also a credible transition plan to a carbon neutral world. And why is this important? So transition plans must provide clarity to consumers, but also to investors. Consumers and investors must be able to make the right decisions in terms of consumption and investments today, in terms to be ready for the long term. And let me make here especially mark, so transition plans will also help to identify potential stranded assets. An important question will be how to deal with those assets, and also who should ultimately bear the costs. And this, again, will have a big impact on the behavior of consumers and investors today. Now, in my view, monetary policy cannot be a substitute for such government actions and decisions. So we should focus primarily on fulfilling our core mandates. And let me highlight the 3 reasons for that. Now, first, central banks do not have the appropriate and effective tools. The governments have much better tools. Second, if we pursue climate policy goals, we may face conflicts with our mandates to ensuring price stability. Of course, mandates can be different, but this is nevertheless a very important tool, a very important point. And third, central banks, given their very narrowly defined mandates, they may lose at the end independence if we start to engage in other issues that are too broad and too far away from our mandates. Now, and this is very important. Having said that, central banks can play a very important role addressing climate-related issues. And this is very similar to what we heard before. So first, we can contribute to the analysis of macroeconomic consequences of climate change by developing new analytical tools. I think these insights will help us to prepare our policy decisions if climate change altered the economic cycle, especially also the inflationary dynamics. And second, central banks can develop macroprudential frameworks further by identifying, quantifying, but also mitigating climate risk by developing robust climate stress tests. And third, we heard that also before from Sabine, central banks can integrate climate risks into risk management of our reserves in our balance sheet. This could be especially relevant if climate change has an impact on the risk-return profile of certain portfolios. Now let me come to the international level. Now central banks here work hand in hand with governments, but the key role should be played by international organizations. And let me elaborate briefly on what I believe is a very critical point. Now we are currently making good progress on the various initiatives aimed at improving our climate disclosure frameworks. You heard that before, very important, at harmonizing the various taxonomies and at developing climate risk methodologies. However, the main problem today is that there is a proliferation of initiatives. This jungle of standards, taxonomies and metrics is harming the credibility of climate change accounting and could discourage investors and consumers looking for support in their decision making. To escape this jungle, coordination is crucial so that all efforts and initiatives may converge. And I believe that international organizations are uniquely placed to provide the necessary coordination. So central banks are well represented and contribute to these efforts, in particular within the G20, the BCBS and the NGFS. Now to conclude, I think it's crucial that international and domestic efforts complement each other well. Standards established by international organizations must therefore be well coordinated and then implemented at the domestic level. So the TCFD recommendations on disclosures are a very good example in this regard. So these are my first remarks. Thank you, Morgan.
Thank you, Thomas. That's very, very clear. To finish this first round of questions, I would like to turn to Simone, because we've been talking about risks, but there are also opportunities related to climate change. And I know that at the Reserve Bank of New Zealand, you have a specific strategy which covers both aspects. So I'll be interested to have your views on how you relate the two and how central banks within their mandate kind of work on both parts of the questions, risks and opportunities.
Thank you, Morgan, and tēnā koutou katoa, greetings from Aotearoa, New Zealand, and thank you for having me along today. I think we've all agreed on one thing today, and that is that we do have that commonality of price stability, monetary stability and financial system stability, and that climate change is a direct challenge to that stability. So although there's variations in our individual mandates, we have that commonality. So the very environment on which we've built our shared economy and societies is changing as the physical impacts of climate change like drought and storms puts urgent pressure on the world around us. So shifting to a lower carbon economy for us will mean significant changes to our industries and to our economies, historically built on cheap access to fossil fuels. So the climate change, I think we're all agreeing again that it poses dangers to our financial system and real challenges to the way we think about monetary policy. And combined, the risks associated with these changes relate directly to our mandates as central bankers, in particular financial stability and monetary policy. So I think it is clear that we have an opportunity, but we also have real responsibilities to take action on climate change as central banks. We need to start out now on our path to low emissions. A climate resilient economy as part of a global effort will help us manage the dangers posed by climate change. It is also, as Thomas was just saying, a shared responsibility, requires a collective response. So we all need to contribute. We think that many of the primary levers are with government, others are with us as regulators, many are with businesses, communities, and also with families. So importantly, our actions as central banks feed into and rely on the economy and the financial markets for their efficacy. So without that coordinated approach and goals, I think the efficiencies of markets and the commerce that could enable our actions to be conducted at scale could also dilute the impact of isolated activities. So great challenges ahead of us. We, as guardians or stewards of the financial system, we feel our role is to guard the prudential soundness of our regulated entities and have an eye to the system as a whole. And foremost, our interest is in the exposure of the financial sector, such as banks and insurers, for climate-related risks. So that's where we're focusing our strategy currently. And the global understanding of climate risk is evolving along with the understanding of how they impact financial stability, obviously. So we are learning as we go. There are also opportunities, as both Pablo and Sabine were saying, to look at our balance sheets to better manage our climate-related risks. We can help in a leadership role there, overcome some of that systemic bias towards business-as-usual investments and long-term assets and an infrastructure that may end up locking in the high emissions trajectory. So, many things for us as central bankers to be thinking about and to be facing into. Or just very quickly on the challenges, identifying and managing risks, obviously one of the really key ones. The risks from climate change are material but difficult to identify, price, allocate and manage with accuracy. So we do need new tools. The NGFS scenarios, obviously really important tools for us all. Increased disclosure, consistent taxonomies to give us more accurate frameworks and scenarios for action. And the last challenge is really just that building capacity within our own central banks, our own organizations and awareness. We need to upskill our own people in climate-related risks and build new capacity to use the tools as I've talked about. So thank you.
Thank you, Simone. So now we can turn to the main course of our panel, because as you may know, or you may not know, Luis gave me some homework to do. He told me you have to come back with some concrete proposals, concrete actions. It's not about talking, this Green Swan conference is about doing things. So now what I'm going to ask you is, to give me some concrete examples, actions that you've been doing in your institution, and that in your view could be serve as best practices elsewhere. And we need to be concrete, down to earth, and should be possibly an example to be shared with the others. Maybe what we could do in terms of speaking order, we could try to go following the reverse order from the previous round, because I know it's late, Simone, in New Zealand. It's like so 9:30 on a Friday evening. So why don't you start, Simone, giving us some concrete proposals for actions?
Thank you, Morgan. It is late, but that's great. This is a very important discussion, so I'm very happy to be here. But look, in terms of concrete proposals, so in New Zealand, we're a small island nation. We have an agricultural and a pure and clean tourism-based economy, and a population that lives mainly on the coast. So we will be impacted differently to many other nations, and that is why we're actively taking steps here to achieve a more climate resilient future. 2 years ago, our Parliament passed our Climate Change Response Act, so we're targeting in New Zealand a net zero emissions carbon target by 2050. We're also the first in the world to announce our intention to introduce mandatory requirements on publicly listed companies and financial institutions to report on climate risks. And so, like other central banks, we've been taking action to understand and mitigate the risks from climate change to financial stability. So we have a climate change strategy in place since 2018. It has three components. The first really is all about getting our own shop in order, looking at our own operations, like many of you, our own carbon footprint and where our investments are going. So last year we reported on our verified carbon footprint for the first time in our annual report, and this covers our direct emissions. We're now working to further refine our carbon footprint by assessing the impact of our investments. So we've also invested in the Bank for International Settlements Green Bond Investment Fund. So in terms of our balance sheet, developing a framework to integrate climate change considerations across our investments into the future. So it's just some examples of things we are doing underneath our climate change strategy. The other thing we are doing currently is working towards integrating the aspects of climate change into our core functions of financial stability and monetary policy. So identifying, measuring financial risks from exposures to climate change, whether it's rising sea levels, more frequent weather events, droughts, floods, or costs of compliance. So we're investing a lot more thought and resources into this, building our climate expertise and awareness through training. We're stepping up the supervision of climate-related risks for banks and insurers, and we're doing joint training with other regulators in New Zealand. We're also taking every opportunity to talk about climate-related financial risks. So we talk about these in our biannual financial stability reports. I know we're going to that's an area where we're building our capacity to look into the future with the inclusion of drought conditions and bank stress tests this year and severe weather events in our insurance stress testing. Finally, we've got a role to build capacity and connection. So we're collaborating across the globe, as most of you are. We're proud members of the NGFS and the Sustainable Insurance Forum, and look, these memberships provide us with tools, latest thinking, and help us with our training. And here at home, we contribute to government policy development So recently we submitted to our Climate Change Commission's advice to government on our emissions trajectory. So I guess just finally, we are also looking at our own unique heritage here in New Zealand. There's wisdom in many cultures on how to manage the environment through generations. We're increasingly seeing globally climate scientists are turning to Indigenous communities, partly because they've been in the same place for a long time, looking after their resources for future generations. So we're building some of those values into our climate work as well. Thank you, Morgan.
Very, very inspiring, Simone. Thank you. Thanks a lot. I would like now to turn to you, Thomas, to have your best practices from Switzerland, what you would recommend.
Thank you, Morgan. Well, we try to do our homeworks in 3 areas, so monetary policy, financial stability, and also in investment policy. And let me very briefly go into these 3 areas. Now, regarding monetary policy, of course, we want to understand exactly how climate change affects key macroeconomic variables, such as prices, interest rates, and output. And what is very important to have a good idea, what is the impact on the equilibria of these key important or key variables, especially the interest rate or the R star. Now, when we conduct monetary policy, of course, we have to take all influences into account, especially also from climate change. And this is new, and this is, of course, as I mentioned, the challenge. So depending on how the analysis show what is the impact on inflation dynamics and output, then we have to adjust and refine our models. At the end, you have to figure out what is the best monetary policy reaction, what is the appropriate adjustment of monetary conditions. But I have also to say this is easier said than done, and today still, if you have very limited knowledge how exactly climate change is impacting these variables and what would be the best and appropriate monetary policy response. So this is regarding monetary policy. Now, the second point is financial stability. There we try to focus whether the banking system or our banking system is adequately prepared for climate-related risks, and whether these risks are also properly covered by the existing regulation or whether we have to adjust our regulation. Now, at current time, we came to the conclusion that transition risks are more relevant to the banking system than physical risks. So that was also the reason why we have now launched a very big project to identify the exposure of all systematically important banks to sectors that are vulnerable to transition risks. Now, it's still too early to talk about the exact results, but the experience that we have showed that the exercise is extremely complex. And let me just share with you some of the challenges that we have identified. So the first challenge is gathering all the relevant information, and this is not trivial, given the information gaps that we have. So just to give you an example here, if you look at current statistical classification systems, they are not suitable for mapping the economic activity onto climate-sensitive sectors. So we have to adjust that in order to figure out what is the impact of certain activities then on climate or on climate-sensitive sectors. So this is the first point. Then the second, climate scenarios for simulating stress tests must be relevant to the risks that we want to explore. And this is why we still need to make conscious judgments when tailoring the scenarios exactly to our specific needs. So for example, we need to make choices regarding the exact type of risks, the number of relevant scenarios, and also the specificities of our country. And the third point is, given the lack of an established approach, I think it's worth using and also comparing different methodologies in assessing the impact of the different scenarios. And it's also very important to keep in mind that the results of this analysis should then provide the basis for the following up actions and to strengthen financial stability and maybe also to adjust the regulation. So it's very important that the quality and the credibility of the analysis is very high. So without comprehensible result, it will be difficult to use the analysis at the end also to address the climate risk appropriately in the banking system. So we expect to complete the project by summer, and of course we will be very happy to share our insights. So let me say finally a few words about our investment policy. Well, first and above all, the investment policy has to ensure that we can conduct monetary policy at all the time. So it's really an instrument for our monetary policy. So given the monetary policy focus of the portfolios, we should not pursue any strategic or structural objective with our investment. And now this is very important. Of course, risks stemming from climate change matter. They matter a lot, but at the moment we treat them in the same way as other financial risks. So we seek to mitigate these risks through diversification, opting for a very broad coverage of entire markets. Now, at the same time, this is also a very important point, we are committed to respecting Switzerland's fundamental standards and values in our investment policy. So consequently, and already as early as 2013, we began pursuing a negative screening strategy based on ESG principle. So we do not invest in shares and bonds of companies whose products or production processes grossly violates values that are broadly accepted at societal level. So for instance, we exclude companies that systematically cause severe environmental damage. And at the end of last year, we expanded our exclusion criteria regarding the environment by additionally taking climate-related issues into considerations. So we decided to exclude from our portfolios all companies that are primarily active in the mining of coal for energy use. Now, last point, I think it's also interesting to see that the composition of our portfolio is evolving quickly along with the transition of the economy. Given the broad market coverage that we have, the share of fossil fuel related assets in the equity portfolio has declined substantially. So 10 years ago, 2010, the share of those assets was 11%, and today it's only 3%. So the portfolio is changing with the transformation of the economy quite quickly. Thank you, Morgan.
Thank you, Thomas. Very interesting views you're giving us on your reserve management strategy. Now I would like to turn to Sabine, who certainly has plenty of ideas for us to be inspired from.
Thank you, Marco. Well, a lot of our capacities at Bundesbank we spend on our work at the Network for Greening the Financial System. And maybe I just outline what people can expect from the NGFS over the next 12 months, because this is really concrete will be very concrete documents, right? What within the next day, hopefully we'll see is an updated scenario analysis. So I think this, and all of you have mentioned already, this is very important, and it is already a base for planning, stress testing in different jurisdictions. Therefore, it is very important that we see now an update on this scenario analysis within the upcoming weeks or days, right? So what we also do within the next 12 months is a guide for banking supervision. We have already published one, but this will be an updated one with the best practices and banking supervisions globally. And thirdly, we will, as I mentioned in my introductory statement, we did publish a toolkit to reflect, for central banks to reflect climate change on our balance sheets. This toolkit is, has offered 9 concrete measures, and now it's up to us to dig a little bit deeper to evaluate and elaborate. So how this can be implemented, and especially this year, we'll, as I said, will submit a guidance on disclosure of our balance sheets with a carbon footprint. We will also tackle with the role of the rating agencies, because what is extremely important is that the market gets the information it needs to go in the right direction, right? And therefore, we will have a closer look at the work of the rating agencies. We will have talks with them, and to understand, where are they, and we also would like to tell them what, from our perspective, is important. And this is also what we internally need, right? Credit ratings and the impact of climate change within our internal credit ratings, right? So this is basically what we will focus on. The Bundesbank staff will, contribute to NGFS or even lead some of this. But of course, we do also a lot of things internally. Maybe since I'm also heading the HR departments, let me just tell you or share that in my view, we get the interest of our staff concerning climate change or ecological issues and the impact on the economic development is just enormous. So we really see in raising interest in dealing with this subject all over all departments, and this is really, encouraging. And it's also a recruitment. We get really high-level, well-educated economists that are interested in this subject. So maybe I think this is not unimportant, because we have to have experts and very well-educated people dedicating to the subject. So I think the most prominent thing we did at Bundesbank over the last weeks and months was we set up an internal climate council, right? So why did we do this? Because, we would like to set an agenda for the whole central banks. And we also would like to set up a narrative and our goals and a timeline for that. So this ensures, that we work hand in hand, and that we join our forces to take over our responsibilities. maybe if you want me to be very precise, I can tell you that, I see especially, of course, the economic departments, the financial stability department involved, of course, banking supervision. I'm sure that Pablo will tell about the Eurosystem and the stress testing timeline, so I leave out that. Markets is, of course, with all our portfolios and asset purchase programs involved, and I think the extremely important unit that is involved is statistics, right? Whereas we all know that data is crucial, and therefore, statistic department plays a major role. And for us internally, our statistics department is the Sustainable Data Hub, right? And what we now do is, gather external data, try to, figure out how do we get more data and how we prepare them, how can we, what is the need to find out that. So this is a crucial part we are right now doing. What I would like to also highlight is what do we do besides our monetary policy portfolios. As you all know, we do have non-monetary policy portfolios also at Bundesbank. Here, we will have a disclosure, carbon footprint disclosure of our non-monetary portfolio, hopefully mid of 2021. We are now currently elaborating an ESG strategy for our own fund, and so we are on our way there. What we, in addition to that, are doing is we are asset manager for a lot of public clients. So the federal government and the local governments, we do, portfolio management for them as well. And in a nutshell, we do have 16 public clients, and 9 of them have already asked us to invest sustainable. So what we did there in the past 2 or 3 years is we set up for them an own ESG indice according to their, needs. Just in May, beginning of May, the federal government asked us to set up their portfolio we are managing for them also sustainable. So by the end of this year, I hope that we will also have a sustainable federal portfolios, the 4 we manage for the federal government. So as you see, a lot of things are going on, and I think to put it in a nutshell, we at Bundesbank have joined our forces in order to take our part of our responsibility.
Thank you, Sabine. So a lot is happening on the data front, supervisory front, investment front, monetary policy front. Pablo, would you like to share with us what you've been doing within the Basel Committee, but also Banco de España? Take the best of your 2 hats.
Yeah, no, maybe I will start with our activities at Bank of Spain, Morgan, although here I will be very brief because, of course, many of the actions that we are taking are very similar to those that have been described by Sabine, by Simone, and also by Thomas. Just to take some examples, we have also incorporated in coordination, by the way, with the rest of the national central banks of the Eurosystem, climate change considerations into our non-monetary portfolio, as Sabine was explaining. We are now preparing a stress test for banks that will be published in autumn this year. We are investing a lot also in our modeling of this phenomena and the implications for economic activity, for inflation, and of course for financial stability. We have also created a high-level task force here internally, trying to coordinate all the different activities. You know for sure, of course, that the ECB, we are now in the middle of a review of the monetary policy strategy, on which we have incorporated also climate change as an important element of it. I can imagine that President Lagarde in the panel that will close this conference will talk in more detail on this issue. Just to say that of course Bank of Spain is taking this very, very seriously, and of course the actions are not very different to those that have been described by others. But I think perhaps in order to complement what what the rest of the panelists have said, perhaps I should focus in a bit more of detail, Morgan, on what the Basel Committee is doing. And perhaps I should emphasize that the topic of climate has been on the agenda of the Basel Committee for several years, and I can even say that we were probably the first or one of the first global standard setting bodies to initiate work on this topic. We set up a dedicated high-level task force on climate-related financial risk that is of course still operational, that it is led by Frank Elderson of the ECB and Kevin Steiro from the Fed, that of course are very well known in this area, and the extensive experience in this area is been crucial, in fact. Perhaps I should emphasize an element that perhaps is not always well known about how the Basel Committee approach any risk, that it has to be analyzed and that potentially can affect the banking system, which is basically what we try to pursue in our work is to ensure a common minimum, I should underline, minimum baseline across member jurisdictions. That we achieve this, or we try to achieve this by pursuing an evidence-based approach. And also that for us, of course, is very important to form consensus that, of course, reflects the different and evolving perspective of our members. And this is very important, also very much related to what Thomas was saying in his first intervention, not the need. I mean, this is a global problem. We need a global reaction, and of course, this means that we have to be coordinated. A clear consensus then is absolutely crucial. So, in general, what we've done is basically to try to analyze the issue in a very rigorous manner. And to that end, we have focused our initial efforts on analytical research on the climate topic, and we have published in April 2 reports that I think are worth mentioning and maybe even more important, worth reading. The first report explores how climate-related risk drivers, including physical and transition risk, can arise and can affect both banks and the banking system via micro but also macro transmission channels. And the second reports provide an overview of conceptual issues related to the risk measurement, but also practical implementation by banks and supervisors on the topic. Perhaps one element that I should emphasize, because this is going to condition the work ahead for the Basel Committee, is that the two analytical reports conclude that traditional risk categories used by the financial institutions and reflected in our Basel framework, meaning credit risk, market risk, liquidity risk, or even operational risk, can be used to capture climate-related financial risk. And this conclusion is very important because I think it provides a strong conceptual foundation for the committee's next phase of the work. So instead of, let's say, treating climate-related financial risk as a completely separate risk type, the committee will explore, it has already been decided that this will be the framework for our action. We will explore possible measures within the current structure of the Basel framework to address this risk. So what we are doing now is we are analyzing the extent to which this risk can be addressed within the existing Basel framework, identifying potential gaps in the current framework, consider possible measures to address these gaps. And I think this is I would say a key value add to the various international initiatives that are underway on the topic. Another important element that I should emphasize, Morgan, is the fact that when analyzing the potential existence of gaps to the current framework, we are taking a very comprehensive approach, meaning that we will look in detail to the regulatory dimension for sure, to the supervisory dimension, but also to, of course, to disclosure dimensions. And I think this is important because we all agree that the topic of climate is all-encompassing when it comes to the potential impact on banks, and therefore it requires a holistic approach when considering potential responses. So let me say a few words on each of these three dimensions, disclosure, supervisory, and regulatory dimensions. On disclosure, it was also mentioned by Thomas. We are conscious that there are a lot of initiatives underway focused on developing a globally consistent approach to sustainability reporting. But it's also true that across the initiative, we still need to bridge gaps so as to build a common disclosure foundation. And also, given the evolving initiatives and some uncertainties related to the measurement of climate-related financial risk, we will consider in near term an appropriate Basel Committee response to support these initiatives. I guess the Pillar 3 framework is a powerful instrument when it comes to disclosure, because, as you perfectly know, it is designed in a very modular way and can therefore be easily updated and adapted to reflect additional risk as, for example, climate-related risk. On regulation, or maybe first on supervision, both our Basel core principles and the Pillar 2 framework are flexible to accommodate any additional supervisory responses. Here, the committee is exploring sound supervisory practices associated with climate-related financial risk, and the idea, or the target at least, is to prepare a report for discussion with the committee in Q3, and of course, if approved, publish the report by year-end. And then on regulation, maybe I should perhaps note with certain regret that far too often the discussion appears to focus on the notion of introducing so-called green supporting factors, to similarly incentivize banks to favor greener loans or greener investments. And as I mentioned previously, the committee will not pursue such an approach, but will rather be led by its mandate. And accordingly, we will be focused solely on the risk profile of different asset classes when it comes to climate change, and to the extent that there is a clear and rigorous empirical analysis pointing to different climate risk profiles across different asset classes, then the committee will consider whether additional regulatory measures are warranted to mitigate such risk. And then finally, Morgan, let me emphasize the point that was very much emphasized by Thomas in his first intervention, which is, well, there are a lot of ongoing initiatives globally. We are acutely aware of the potential fragmentation when it comes to different supervisory and regulatory initiatives here, which in turn could lead to undermine the global level playing field. As such, then it is absolutely crucial that there is broad agreement among the larger set of global public and private sector bodies when it comes to issues such as consistent definition, taxonomies, and of course even approaches. And I think that this is absolutely crucial prerequisites to any subsequent disclosure, supervisory or regulatory initiative pursued by the committee. And it's extremely important to maintain here global coordination and seek global measures where relevant. Thank you.
Thank you, Pablo. Well, all of you have been so concise and clear that we have plenty of time to discuss between ourselves, and we also have plenty of time to take some questions from the audience. So taking a look at the Q&A box, what I see is actually, there are 3 questions, but one of them in my view has been already answered. There is one question which would be more targeted to you, Simone, is about the experience you're referring to, that working with a native population to see what the best practices they've been using in the past to preserve the environment. Dirk Schoenmaker from Rotterdam University would like to know more about this. Then there is maybe a second question about signaling effect, because central banks, of course, can do a number of things. They make decisions on interest rates, they invest, but they also have the signaling power. And what could they do? What should they do to encourage, to motivate other institutions in their country to do a number of things? And last question, which is from me this time, listening to you, I really have the impression that things are progressing very, very, very swiftly, with some stress tests going on, with some level of maturity in terms of investment practices, which is growing rapidly. And so the question I would like to ask to each of you is, what is missing? What do you need? In your view, if you could change something and say, okay, to progress, we would need this and this, it would be interesting to know exactly what you would say. So to get back to this question to Simone about native people, another one about signaling effect, and third one about what is missing.
Thank you, Morgan. Do you want me just to take the one? Yeah, sure.
Everyone can speak, no order.
Great. Great. So with our connection to our indigenous people here as our Maori, Te Ao Maori strategy, as we call it. So really what we're looking at is the very successful values that a lot of Maori business incorporate. So they have a much more long-term and intergenerational view on the world, and that underpins their business strategies. So and a lot of our Māori economy and Māori businesses are incredibly successful. So, you know, what we're thinking about, and as we're talking to our institutions, is about that long-term horizon. You know, perhaps taking less of a short-term shareholder view, and more when you're thinking about climate risk, it's that long-term broader stakeholder view. So I guess, you know, it's really the values and the practices that we see through some of our Te Ao Māori values in New Zealand that we think have great parallels and a great value when we're building climate resilient economies.
Thank you. Who would like to step in on the two other questions, signaling and what is missing?
Well, Morgan, if I may, just regarding what is missing, I believe what is extremely important to have an overall consistent approach. We are talking now about green finance, we are talking about the stress test, etc. But without having a carbon tax or something that changes relative prices that are relevant at the end for both consumers and investors, it will be very difficult to achieve those targets. So we need this overall approach so that at the end, the stress test makes sense, that also portfolio adjustment makes sense. But if at the end relative prices do not change, or if these taxes are not adjusted, and even worse, if subsidies continue to be very relevant, I think many things we are here discussing will not have a big impact. So we need this overall consistent approach. And I mentioned before here, really the governments are in the driver's seat. So without them, I think everything we do elsewhere, especially also within central bank, has a very limited impact. So we need this very consistent overall approach. Thanks.
Maybe I just would like to fully support Thomas. I think, and answering question number 2 and 3, because I think they go hand in hand. What definitely is missing is a global approach about, you know, price signaling. I think what is crucial and the market understands very easily is, you know, if we send clear signals, governments and global institutions set the right signals so that the market understands very clearly, okay, this is the way we have to go, right? And a decent carbon price on an international level is certainly a crucial point, but in addition to that, I see disclosure as a crucial point, because, you know, all of our discussion has led to this, oh, where are the data, right? So this is crucial. And but I see, you know, since a couple of months, especially since December last year, a good development, and so I'm you know, hopeful that this will happen. When the question also was signaling effect, you know, signaling effect, first of all, I think governments send signals or should do so. That's what I meant in the beginning. And we, you know, it's certainly, you know, whatever we do as central banks, that is a signal, right? So we are so powerful and credible that whatever we do has a signaling effect, whether we want or not. I did, you know, already 1 year ago suggest that, you know, we as central banks should think of, you know, how about if we only accept collaterals or asset purchases if, you know, the issuer has published or has disclosed the relevant data, especially carbon or any other relevant data. So this is certainly something, you know, that would also have an impact on the market. And therefore, I still think that this is a way we should think a little bit more about.
Pablo, you're muted.
Okay, sorry. No, I was saying that, I mean, another way to put exactly what Thomas and Sabine have just said, on which I fully agree, is to say that of course signaling is not enough. You have to move from signaling to real action. And of course, this means that governments should start to act in the tax system, as was mentioned by Thomas, would be probably the crucial element here, and of course in a coordinated and global level. Just consider that, for example, when we are trying to incorporate climate-related financial risk into financial stability considerations, the transition risk that we are measuring is very much focused on, or depends crucially on, the actions taken by the government. Okay, so if these actions in the end are not taken, in the end, of course, this transition risk, at least part of them, would not emerge. So in order to create, let's say, virtuous cycle, you need, of course, signaling by everybody, including central banks, but then action by governments, that in the end, with our own measures in terms of trying to incorporate this risk into the actions of the financial sector in general, in particular on banks, will change relative prices, as Thomas was saying, and in the end, we will succeed in the final policy objective of all this topic.
Morgan, can I just add one point here?
Of course.
I fully agree also with Sabine's remark regarding disclosure of collateral and assets. But I think one point that is important in my view and makes it a little bit more complex is now the economy is on a transition way to a new equilibrium of a carbon-free world. And we have many industries, they need some time. So to give you an example, steel, concrete, cement, etc. So they probably will still have a big emission of carbon for a series of years. But I think it's very problematic to exclude them from portfolio if they are on a way to this transition. So I think the question is much more complex, how to construct those portfolios when we have the aim of a transition of the economy. But not, I think the goal cannot be to disinvest everything, but we have to figure out what companies are on the right way and even accept if they still need some years where the transition is very high. So steel, we in Switzerland, we use a lot of steel in construction, probably more than average, but steel is still only produced by using coal, and coal is something where we know has a high carbon emission. So this transformation, the technological innovation is very important, and the way we construct portfolios should also take that into account, this medium to long-term transition of the economy.
Sabine, you're muted.
Oh, I am. Oh, sorry. then that's not possible, but wait. Is it better now? Yeah. Okay. Great. Good. So fully support what Thomas said. I think the thing is not to be green as of today and only because we all know what is waiting in this transformation is such a big task for the whole society, and we will see social tensions. And our goal should be to really manage the transformation over a given period of time to allow all kind of industry to adjust. The timeline has to be just because time is flying. But as Thomas said, it is about the transformation of the whole economy, and we also have to reflect this when we're talking about all our measures we would like to implement.
Good. Pablo or Simone, would you like to step in on this point?
Well, maybe just. Sorry, Simone.
Oh, sorry. I just would agree with Thomas that it is a real challenge to construct a sensible pathway to transition. I think that is a challenge for all of us. But I think coming back to the signalling piece, even if we can have those clear policy signals of what is going to be mandatory in 1, 2, 3 years' time, etc., I think you can accelerate some of those behavioural change pieces we need and start to get that sensible transition moving. So.
No, just one addition to what Thomas and Sabine said, and Simone now. well, sometimes I tend to think about the challenge that we have with this topic as well, relatively similar to the one that was generated by globalization, in the sense that, I mean, we know that certain actions are absolutely good for all, but of course we know that they will create some negative short-term effects for a few, and in particular for some sectors. And this is why it is important that fiscal policy here, of course, focuses on changing the relative prices, because this is absolutely crucial for the final goal that we want to achieve. Of course, they have also to focus on certain investment that it is needed here. But I think it's also important to complement these two arms of fiscal policy with some compensation in order to allow for the transition of certain sectors. Now, without this, I think it is very clear that, I mean, these social tensions that Sabine was mentioning are going to be very real and will very likely stop the process. I think here we cannot miss this point in the policy reaction.
Yeah, if I may say so, we experienced this in France a few years ago. I would say the social acceptability of your policy framework is key in there, and also the long-term acceptability over time and the fairness. I mean, people need to see that it's fair in the way it's being designed. I guess we learned it the hard way. Interestingly enough, I think we have a few minutes left. What you're saying here echoes very much with the debate we hear now about being net zero, because you see a large number of companies saying I will be net zero by 2050, but at the end of the day, you don't really know how they would do that. You don't really know the pathway. You don't really know the impact in terms of energy mix or business model. So would you support a more ambitious disclosure on that particular front? So as to judge the credibility of the pathway?
Maybe, Moko, I just jump in, because what happened in Germany was just a couple of days ago, a decision by the highest constitutional court of Germany saying that, only setting a goal is not enough. You also have to do something now to, enable also the future generations to have some space for their action that are needed there. So I think this is exactly what you address. I think it's now, we all know that we have to transform. We know that, but we are struggling with how, right? And I think what I see now also in the election campaign in Germany, we do have federal government elections in September. Climate and how we're going to mitigate climate risk is the most prominent topic in our country. And this is, I think, shows that, action, the society wants clear answers, precise answers, as we did, Therefore, I think our panel is very helpful. We are very precise. Thank you.
Yes, you are.
If I may, Morgan, here, I think the ideal world would be one in which we fix the targets, we define the actions. We, the governments, the parliaments, we even are transparent on, the elasticities, the multipliers of the different actions on the final goals. We are also very transparent on the uncertainty, okay, that we know exists on the different dimensions of the measurement of all these risks and impacts. And then that, of course, there is a path, of course, for reaching those targets. And then that periodically we reevaluate and explain to citizens what has happened and how we react to the potential deviations. Of course, that should depend also on the origin of the deviations. I think that would be very important for this topic, because we know how difficult it will be reach. It will be to get to the final outcome of it. The political economy is also very complicated, because we know that there will be very different governments in the following years that will have to to be compatible, the actions of one of them with the others. So I think this transparency is for me also absolutely crucial. If we want to have the right debate in our democracies.
Well, Morgan, if I may just add one point here. I think for the individual firm, of course, it's quite a challenge to exactly explain how they will do the transformation over 10, 20 years, given all the uncertainty. But in my view, technology will be extremely important. And I think when we have the better technology, that it will go very quickly. So when we can substitute fossil fuel more easily, when we can substitute coal for the production of steel, all these kind of things. And even if you can absorb some of the carbon out of the atmosphere again with new technology, that will be a big game changer. So we have to give the room that this technology can be developed and give the right incentives that we end up with those technologies that really help us for this transformation. And that at the end will probably also be the answer to the social questions. When it's possible to provide the technology that provides relatively cheap energy and also cars, etc., that can be used at, or can be bought at lower prices, but without this emission, that will help us a lot. So technology is very important. So we have to set the right relative prices today and hope that, or not hope, to make sure that the technological advantages or progress will be big enough. Thanks.
Thank you, Thomas. So Simone, do you have a last word to say before they close down the session?
Yeah, thank you. Look, agree with all that, and I think more ambitious disclosure on the pathway definitely helps those companies that are perhaps not as well resourced to do the work themselves and are still learning and need to learn from what other companies are doing. So I definitely support that more ambitious disclosure on the pathway. Thank you.
Thanks a lot. I think time is up, and I suspect there must be a high level or a keynote schedule at 10:15. So I really would like to thank you a lot for this very, very interesting and rich discussion. You gave us plenty of concrete, interesting proposals, very useful food for thought. There are still some questions who came in. I will see how we will handle with that, maybe offline. Thanks a lot for everything. I wish you all a very good day, and to you, Simone, a very good night and weekend.
Thank you very much.
Bye.
Thank you. Bye-bye.
Thank you. Thank you. Bye-bye.